I'm here with Philippe Roos, Analyst and Senior Reporter with Energy Intelligence. Good morning, Philippe.
Good morning.
And we saw yesterday the release of the new IPCC 1.5 degree report, which implies far faster decarbonisation than had been envisaged to date. I mean, how much of a challenge do you think this is going to be for the oil and gas industry?
It's quite a challenge, actually. I mean, one can say that the oil industry is probably safe for a decade or two, but when you look at the scenarios that the IPCC have been looking at, they basically all imply that we don't use any fossil fuels, whether it's coal or oil or even gas, after mid-century or after 2060, and that's true even if we do massive CCS, massive carbon capture and storage.
Do you think that that's an attainable target? I mean, it implies a lot of effort compared to what's been made so far.
It's an extremely challenging target, and we are clearly not on trajectory towards that target, but things can change pretty rapidly. So it's still possible, and actually the report says we're not on trajectory, but it's not impossible, so it could happen.
And we've seen that oil companies increasingly, or some oil companies, increasingly diversifying into kind of new energy sources. I mean, how serious do you think they are about building sizable new energy businesses?
I think they are serious and they're investing some amounts of money, but one should also say that it's pretty small compared to what they're investing in oil and gas on the one hand, and to what the renewable and new energy sector needs on the other hand. But it's totally new for them, so I'm not sure we can expect them to invest dozens of billions of dollars overnight into that industry, although they could afford it. So,
and looking at investments, I mean, we've seen investors increasingly becoming more proactive with the ESG debate and demanding more information of companies. I mean, do you think that this is a pressure that will continue to grow and force the industry to kind of change?
Yes, definitely. And asking for information is the easy part of that trend, which will turn into asking for action. I mean, first asking for stress scenarios and things that are a little bit more tricky to get and to explain than just data, and then action, and then what's the best strategy for oil companies? Is it to diversify massively, more massively than what they're doing into renewables? Is it just to shrink? Very difficult to say. And one other point I should also mention is that the financial pressure might be felt much earlier than many people would expect. I mean, the financial sector could change its mind, and therefore the valuation could change very rapidly as a bubble exploding tomorrow, 5 years, in 10 years, nobody knows.
And in terms of diversification, I mean, the big energy companies, or big oil companies, have diversified into gas, I mean, a lot in the last few years, touting it as a bridge or even a destination fuel. How realistic do you think that is? Do you think there's a danger that could be challenged?
I mean, as a transition fuel, I think it's pretty safe to say that gas will be an interesting transition fuel for the next 10, 20 years. That makes sense. Gas being a destination fuel, it's more difficult to believe, because gas is a fossil fuel. Gas emits CO2. Gas is quite useful to make up for renewable energy intermittency, but there are more new solutions coming, such as energy storage, such as renewable hydrogen. So I'm not quite sure gas is a destination fuel.
Lots of challenges ahead then.
Yeah.
Great, well, thank you very much, Philippe.
Thank you.